Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is the FX rundown. The dollar index is trading out above 98. It's looking to confirm a bullish breakout if it can close above there on a weekly basis. Now what we're looking for tomorrow is quarter one GDP. It's the second read. If it comes in better than what we had on that first read, it's going to continue to fuel a bullish dollar. You also have Fed Governor Clarida on the schedule too, and pending home sales. So keep an eye on all of that. But the dollar is acting as a safe haven here. It's outperforming gold, and it's following Treasury prices higher. Sovereign debt yields around the world are all sinking as there is relevant fear with the ongoing U.S. and China trade war and poor PMI data last week. So keep an eye on that. Again, the dollar index is acting as a safe haven. What's driving the dollar is really that euro weakness. The euro is staying below 112 pretty steadily, and we're looking for a descending trendline support that comes in about 110.80. If it continues to close lower here, it's setting for a close below 111.5, and it continues to do so. It's going to pave that path down there. So keep an eye on it. With that descending trendline support, you do have also a descending wedge pattern. So you want to be careful if it does ever reverse. You want to be getting out of the way. A descending wedge pattern can be a bullish pattern. For now, though, the path of least resistance of the euro is lower, and again, we're targeting 110.80, which is where that trendline support comes in. What also has a descending wedge pattern is the Canadian dollar. Canadian dollar now has some support coming in below that 73.70 area is where that trendline support comes in. So keep an eye on that. The Bank of Canada met today. Really not a whole lot other than feeling that the recent downturn in economy in Canada as well as the globe globally is more transitory. You're seeing the Canadian dollar lower with other risk assets. The Aussie dollar is also trading lower with other risk assets. So the Aussie dollar is high yesterday. It's been dissipating slowly since. And remember, there's a lot of support down here in the Aussie dollar, 68.25, 68.5 area. These are previous lows. So keep an eye, keep staying nimble. If you are selling down here, you don't want to get stuck in a sharp reversal. And again, you want to keep a pulse on what's going on coming out of China. Tomorrow evening, you do have Chinese PMI data, so keep an eye on that. And then lastly, the yen. The yen has performed very well over the last week or so. It couldn't follow through on gains today. It did trade higher. Now, there is some trendline resistance in the yen going back to that early January spike. It is giving a little bit of headwind overall, too. We have other resistance levels that are still above there, but 91.80, 92, and the yen is struggling to hold above there. Today's dollar strength is offsetting any potential strength the yen has really or could have seen from the equity market weakness and broader weakness in risk sentiment overall. The S&P is below 2,800. As long as it stays below 2,800, the yen should try and hold ground here, if not accelerate higher. Remember, a lot of resistance there. If it gets above 92, that could be very bullish. Give us a call. We're here to help talk about anything on the board, 312-278-0500. You can email us info@bluelinefutures.com. Check our website for updates. You can sign up for a free trial of our research there. But remember, futures trading involves substantial risk of loss. Is not suitable for all investors. Thanks a lot.